Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I'm Arjun Patsati, and for the fallback on the heavy government borrowing announced for next year in the budget presented this week is that auctions are going through tough time. Government borrows bonds through auctions, which is held every week, and the RBI manages those auctions. And in this bond auction, the 5-year and 14-year bonds saw the RBI rejecting all the bids in the auctions by the underwriters and the participants in the auctions because they didn't want to show very high yields in the auction. And I wonder what RBI is going to do to manage the heavy government borrowing plus inflation plus Fed rate hikes and all that, and also go through this heavy go through the market's lack of appetite for bonds. So it's going to be a very tough time for RBI and the bond market, and especially the government bond underwriters who will face very difficult times in trying to underwrite the government bonds and then downsell it to investors if the RBI is not giving them the yields that they require. And with the incessant supply of gsec and state government bonds, there could be a lot of issues next year in the auctions. So RBI will have a tough time and they'll have to think of a solution on how to manage this borrowing. In other areas, the 10-year GSEC again closed higher, 6.92%. It fell below 6.90% in the after rising to all the way to 6.95% post the budget. But yeah, the worries are clearly that market is worried about how the whole thing will be managed by the RBI. The US 10-year Treasury yields again rise to 1.82% after falling from highs of 1.85%, and clearly indicating that inflationary expectations are still high across the globe, and the Fed is on its way to raise rates in March. And in other corporate bond news, Incred Financial has floated a public debt issue. Now, this is the 12 and 24 months issue over 9.25% levels. And clearly, I think more and more NBFCs will come to the public debt market to raise funds, given that interest rates are rising. And with offering attractive yields, investors they allow investors to invest in their borrowings. Thank you very much for listening in, and do not forget to download our Quick Invest by INR Bonds app, where you can see the best bonds to invest in a rising interest rate scenario. We have staggered maturity bonds, 1 year, 2-year maturity bonds, offering good deals with good moderate risk. And all this will help to protect your portfolio as well as earn returns in your portfolio in a period where interest rates are rising. The apps the download to the app is given in the description below. And do not forget to subscribe for our YouTube channel if you have not done so already, and do press the like button. Thank you.